Good morning. When I became the CEO of Verisk, the first person that I called was actually just on this stage, Henry Fernandez. Henry's been a CEO for over 2 decades, built one of the most extraordinarily successful companies. And I said, Henry, what advice do you have for me? And it was remarkably simple. He said, Lee, if you create value for your clients and you create value for your employees, you're going to create value for your shareholders. Now, it was really important advice for me because I had been the CFO of Verisk, I had been the CFO of NASDAQ before that, and so naturally I was very centered on investors, which isn't a bad place to be, of course. But it broadened my perspective to our clients. And I've spent a lot of time with clients in my previous roles, but it was also important for me to be thinking about how we create value for our employees, which is even more important than I think it was probably 10 years ago, and focused on them. So that broadening was incredibly valuable. Now, the other person that I called is also on the stage. I reached out to Ron through Adam, and I said, really would love to get your perspective. You've seen a lot of great companies, you've seen a lot of great CEOs. Can I get your advice? And so, Adam was kind enough to arrange a meeting with Ron. Now, the only difference was that I thought I was going for advice, and I showed up and I got a 40-minute grilling on the trajectory of our business, my strategy and where we were headed. And I have to tell you, I've never found someone who has as much passion about understanding businesses and finding value in companies, and it was extraordinary. I felt incredibly fortunate, not only to get the advice, but the fact that Barron remained an investor after that meeting. Now, I ultimately did get the advice from Ron, and it was really interesting. Ron said, Lee, when you're making decisions, I want you to make those decisions as if you are the owner of the business. And that's really remarkable. It was complementary to what Henry told me, which was focused on clients and employees, but the focus on thinking for the long term and as if we had owned the business. I grew up in a small family business, a mom and pop photography studio, so I understood that owner mentality. So I'm really incredibly honored to follow Henry, to be on the stage with Ron, and to be here for the first time at the Barron Conference, and really delighted to talk to all of you about Verisk. Now, I have to warn you, if we're going to talk about Verisk, which sits at the center of the insurance ecosystem, and in a lot of ways, we are the central nervous system for the insurance industry, we are going to have to talk about insurance. Now, in some cases, people are so overwhelmed with enthusiasm for the insurance industry, we've had people pass out in these conversations. So if you're feeling lightheaded or faint, just put your head between your legs. We'll get through this relatively quickly. But it is important, and the first thing that I want to emphasize is the insurance industry is much older than you think. The folks at Lloyd's will tell you, the Lloyd's of London, they created the insurance marketplace 300 years ago in Lloyd's coffee shop, and that's true. But you can actually go back much further. 2,000 years ago, at the height of the Roman Empire, Roman emperors guaranteed shipping in order to encourage trade and to encourage shippers to take the risk of losing cargo on voyages, in much the same way that our federal government provides a natural flood insurance program to encourage building. And the state of Florida is an insurer of last resort through their Citizen subsidiary. So this has existed for a while, but we can go back even further. If any of you have been to the Louvre Museum, hopefully you've seen this remarkable artifact, which is known as the Hammurabi Stela. And inscribed are the laws of King Hammurabi, a Babylonian king 4,000 years ago. And one of those laws says that if you as a farmer have borrowed money to finance your crops, and those crops are destroyed by a weather event, flooding, a storm, you do not have to repay that lender. Now, you might say, Lee, that doesn't really sound like insurance, but it's a very important transfer of the risk. And what happened is that the lenders began to include a premium to compensate them for the risk that they were bearing. And that premium ultimately got separated, and that became the function of what insurance companies do. Now, I've taken you back 4,000 years. This industry has been here for a long time. I don't think it's going anywhere. And since then, we've had incredible advances in science and technology, including contributions by great scientists like Edmund Halley, who discovered the comet. He actually created one of the first mortality tables. Blaise Pascal laid down the initial laws of probability, which became the foundation of actuarial science. And Daniel Bernoulli introduced the concepts of economic utility and risk aversion, which created insurance markets. And we at Verisk are very much in that tradition of moving the industry forward through science and mathematics and technology. We have hundreds of data scientists, we have hundreds of technologists, we have hundreds of actuaries, and our job is to help the industry better assess and price risk by gathering new data sets. Now, the global insurance industry today is also huge. It's been here for a long time, and it's massive. Allianz Insurance Company, one of the largest in the world, estimates global gross written premiums to be $2.2 trillion, and that's growing annually about 5%. Why is it growing? Well, combination of factors. One, economic growth is encouraging growth in insurance premiums because we have more buildings, we have more automobiles, particularly in high-risk areas. We also have the impact of inflation. So materials costs and labor costs to repair damage is going up. And we are seeing, as many of you may have encountered, growing severe weather events. We've seen it with Hurricane Helene and Milton and flooding around the world, and all of those are contributing to this growth. Now we're going to take a quick break for a quiz for all of you. Despite all of these increases in insurance and all of the science in predicting risk, there's actually one state that up until very, very recently prohibited the use of forward-looking models for determining insurance premiums for policies. And so by a show of hands, it's 1 out of 50, I've narrowed it to 4. How many of you think that that's California? Okay. How many think it's Florida? Okay. How many New York? And how many Texas? All right. I think I saw more hands for Florida than anywhere else. I'm happy to tell you it's not Florida, and it's a little ironic because California certainly presents themselves as a center for technology and science, but California, up until very recently, did not allow forward-looking models, and that's a problem because in an inflationary environment and with increasing storms and wildfires, particularly in California, insurers can't anticipate those higher costs. And in fact, we had some insurers that said we can't write in California anymore because we're putting our capital at risk. Now, the very good news, literally last night, the Insurance Commissioner of California announced that they were going to accept forward-looking wildfire models to be factored into homeowners pricing. So that's great news. But it gives you some sense of what the industry is dealing with. Now, we all know the reality is that severity of storms and exposures is increasing. You can see it in the headlines. You know, beyond Hurricane Helene and Milton here, we've had severe flooding in Spain. We have an office in Malaga, Spain, and our employees couldn't get to the office because of flooding. You've seen it in Valencia. We're also seeing non-natural perils like technology outages, which are creating business disruption. So the industry is dealing with these problems, and they spend a very significant amount of money in addressing this. We actually put together an annual estimate of what the insurance industry is exposed to from natural perils. And our most recent estimate is that the insurance industry collectively has to be prepared to absorb an average annual loss of $150 billion. And that's up 14% from last year's estimate, driven by inflation, driven by increased exposure, and the emergence of more severe weather events. And so in wrestling with these challenges, the US property and casualty insurance industry, about $950 billion in gross written premiums, spends about $500 billion in expenditures. A lot of that is on technology, including data. And to date, we at Verisk represent only a very small percentage of that. About 0.3% of premiums, only about 0.4% of their total expenditures. And a lot of our growth has been driven by the industry's adoption of more data and more analytics and more technology. And that's put us in a position where we have been able to deliver very consistent and predictable growth over the last 15 years since we were fortunate enough to have a Baron Capital's investment in our IPO. Our revenue has grown 8% on a compound annual growth rate. And even if we look at our organic constant currency growth, it's been 7% over that 15-year period. And that's been within our expected range of 6 to 8%, 88% of the time. And when we were outside of that range, you can see on this graph there are two 5%. One was in the middle of the financial crisis in 2009. So even despite all of that turmoil, we still grew at 5%. And then the other 5% was in the first year of the pandemic. So that's pretty strong, predictable growth. Part of the reason for that is that 80% of our revenues are subscription-oriented. So despite the volatility of the industry that we serve and the risks that they face, our revenues have consistently grown as we've served that increasing need for data and technology by the insurance industry. We also have great operating leverage. So our EBITDA has grown even faster, 8.7% over the past 5 years, and our margin has improved by 375 basis points as we are able to extract a lot more value out of the investments that we are making within the business. And all of that has contributed to over a 900% return since our IPO relative to the S&P 500 at nearly 500%. And so I think you get a sense of the secular trends that have enabled us to continue to grow and create a durable competitive advantage from the resources that we bring to bear. So how did we get here? Well, interestingly, and it's important to understand that we started out as a utility. And that utility was there to serve the U.S. property and casualty insurance industry. We gathered data on their behalf. We filed that data with the state regulators. And we normalized and used that data to help insurers benchmark what they do to improve their selection of risk. And from that utility mentality carried over to investments in claims technology and in catastrophe modeling. And through that growth and strength, we ultimately were able to go public in 2009 on NASDAQ. And today we're a $40 billion market value company with 7,000 employees in 16 countries. Now, behind all of that is a lot of data. How much data? We have 40 petabytes of information, and it's growing, particularly as we see more digital images involved in the insurance industry. We have 34 billion premium and loss records on individual policies that we capture for the industry. We have $1.7 billion claims that are contributed to our anti-fraud databases, and we have 19.5 million property claim estimates that we receive. All of it is proprietary contributed data that is impossible, if not difficult, to obtain otherwise. Now, I'm going to focus on a very specific data set to give you an understanding of how precisely defined our data is for the insurance industry. We're sitting in this historic, extraordinary building, the Metropolitan Opera Place. And as a commercial building, we have a database called Prometric that tracks over 19 million commercial buildings. And I can tell you that our team has analyzed first the structural elements of this building. How is it constructed? What materials is it made out of? What interior materials are here that are potentially flammable? What the walls and divisions are and their structural weakness. And good news for all of us, this is an ISO Class 6 building, the highest construction class in terms of resistance to fire. But then we also evaluate the external services that can protect this building. And I'm very happy to tell you that the Fire Department of New York, FDNY, the city's bravest, is considered one of the best fire departments in the world. We actually individually rate fire departments around the country. And I can actually tell you the water pressure, or I should say I can't, but we can tell you the water pressure in the hydrant system surrounding here, all of which are very relevant to an insurer. And then finally, we apply geospatial analysis to evaluate the prevalence of high winds, exposure to large bodies of water for flooding or for typhoons, as well as other exposures such as earthquakes. And all of these will tell us that we are in the 86th relative hazard percentile, which is a very high percentage. Now that's data, but Verisk is really data in action from an underwriting standpoint. And in order to give you a sense of the variety of data and how we apply it to a storm situation, I want to go through pre-hurricane and post-hurricane. This will give you a sense of both the data that we use and how it integrates across the insurance industry's need. And it's, firstly, the data that we collect on a contributory basis from the industry is used to underwrite policy. We will refer to that as our forms, rules, and loss costs. And that represents, those businesses represent about 32% of our business, highly proprietary data. We also have external data sets that we gather for the industry, and that would be the Prometrics database that I just described that gives us all of this detail in the Metropolitan Opera House that insurers use to help guide their decisions. And then finally, from a pre-catastrophe standpoint, we do catastrophe modeling to determine what is the risk of this location or any location and their exposure to flooding or hurricane or severe convective storms around the country. So all of that serves as the basis for determining how do we price this policy, how do we evaluate the risk, and what is possible from a risk standpoint. Now, once an event occurs, we move into kind of the post-hurricane elements that we serve. One of them is when we receive a claim, we have a database of billions of claims records that allow us to determine, is this potentially a fraudulent claim? And we save the industry, by their estimate, $4 to $6 billion a year by identifying insurance fraud, by connecting the industry and sharing that data. And then once we have received the legitimacy of a claim, we help estimate the cost by using a national database of very current materials costs and labor costs to allow the insurance company to quickly determine how much they should pay their policyholder and pay the contractor to repair that damage. All of these businesses represent about 80% of our total revenues. There are a lot more things I could go into, but hopefully that gives you a sense of the scope and the very specific contributory and proprietary nature of those data sets. And I also want to clarify, even though we're talking about storms, again, we have very stable revenue across these businesses. 80% of it's subscription, and you've seen that in the very stable revenue growth that we have. Now, I want to emphasize it's not just data, it's also the advantages that we have built over the years. We have very strong connectivity to the insurance industry, extraordinary understanding of the needs of the insurers, and the ability to meet those needs from a utility mindset. We have incredible data sets that we can apply to specific uses and increasingly integrate against broader functions that the insurance industry is dealing with. And we have the scale to be able to make those investments and leverage them across the industry. So these are the competitive advantages that we have from where we sit and where we feel very privileged to not only help the property and casualty insurance industry in the US and globally, but also improve the resilience of our nation, of the world, and of communities broadly. All of those strengths enable us to extract value through a very simple economic model. Our ability to invest in a new data set that's relevant to the industry or a new technology, leverage it at scale for the industry, and deliver significant new insights that help them better assess risk and price risk and return value in terms of their efficiency remains incredibly powerful. We're back to Henry's concept. If we're creating value for clients, then we're going to create value for our shareholders. And I'll give you a very recent example of that. I'm sure many folks, I heard Henry speaking about generative AI. Generative AI is a very important opportunity for the insurance industry. We have a half dozen generative AI applications that are already being used by clients in a variety of underwriting and claims situation. This is technology that we could develop more quickly. We could get it in front of our clients, integrate it into their workflows, and it's creating an opportunity for them to create more value and improve that productivity. And in addition to those half dozen that we have already deployed, we have another 40 projects that are in the works that our team has shared ideas on how we can develop this particular application. A lot of it is taking the massive amount of data that we have from the industry and enabling the insurance professionals to increase their ability to pre-digest that and use it more quickly and readily. The other element that we are very focused on is modernizing technology and improving connectivity through that insurance industry ecosystem and that network that we serve. And we're doing that in a variety of ways in the claims industry, even in the Lloyd's London market, which has been around for 300 years, as we've talked about, and we have the opportunity to help them become more efficient and more effective. All of this supports our ongoing opportunity to continue to generate exceptional levels of revenue growth, use operating leverage to drive EBITDA, increase our margin, and deliver strong EPS growth for our shareholders. We are extraordinarily privileged to be able to serve this function. It's a great opportunity, not just for Verisk shareholders, but also for our communities as a whole to improve resilience and improve the insurance industry. So I hope I leave today having accomplished two things. One, hopefully having all of you understand what a predictable growth business that we have and the opportunities ahead of us. But also, I hope this is the most fun you've ever had talking about insurance. And so with that, I'll be happy to take questions.
Great.
Thanks, Adam.
Thank you.
That's really good.
All right, we're going to go to our Q&A session. So let's see. Oh. Let's start with number 2.
Thank you for that. It was fascinating insurance talk. Could you talk about the recurring nature of your customers, sort of your logo growth versus the persistency of existing customers and your acquisition of new customers?
Yes. Thank you very much. So the recurring nature of our business is such that our clients know that they are going to be underwriting on a regular basis. And so we set up access to our data largely on a subscription basis. And for their benefit, it provides a very stable expense component to their overall model. And it's been something that I think has benefits for us because we have that stability and the client knows that this is a access to data that they can use in a variety of ways. And that's true across our underwriting businesses, largely in our claims side as well, although there are some elements that depending upon weather events, we may see an uptick in certain areas. We do have some variable elements that are tied to some of our growth businesses that may be more transactional at the start as we're encouraging adoption of those products, but it's largely that subscription orientation that is not uncommon from a lot of information services companies. With regard to your question on international growth, because we came out of a utility function in the US, we have very strong presence and the industry has benefited from that. I think that has put the U.S. property and casualty insurance industry in a more advantaged position from a data and technology standpoint. And I hear that from our international clients, some of which who do business in the U.S., and they say, boy, I really wish we could have access to the same data that we have internationally. So we do have international businesses. They represent about 17% of our total revenues, and they are growing at a faster rate, reflecting an opportunity for us to grow further as we bring more data and technology to those markets. And in terms of new customers, we are highly penetrated into the US P&C market, but increasingly the applications that we have for assessing risk by self-insured corporations, by government entities that want to understand risk. We have some large government agencies. We run the National Flood Insurance Program on behalf of FEMA. We rate communities. We think that this issue of community resilience and risk exposure is one that our data and analytics can be very valuable. So those represent opportunities for us to develop new client sets that we're pursuing.
Let's go to number 12.
In these times, how does politics affect your strategies?
Thank you. So first, I think it's important to understand that the U.S. insurance industry is a state-regulated entity. It's actually an act of Congress. It's known as the McCarran-Ferguson Act. And so consequently, generally, federal government, federal politics does not heavily influence the insurance industry. So that as a broad statement, provides relative stability across the insurance market. And I think that we are recognized as an entity that encourages competition, allows the industry to improve, and there is a general public good associated with what we do. We certainly feel that way and are on that mission. I do think we also have to recognize, however, as many of you may have experienced, particularly residents of Florida who've probably experienced the most significant increases in homeowners insurance premiums that are up 57% over the last 4 years and are generally about $1,000 higher than other states, that inflation and the affordability of insurance is certainly an issue that individuals are not happy about, and there is certainly the potential for political pressure around that. We're working to try to make the markets more competitive, more efficient to address it. And so I think that's one area that we watch from a political exposure. But generally, insurance has not been a primary focus point from a political standpoint.
Let's go to number 6.
Hey, so my question is related to what you can actually do with this data, right? If you're collecting data on consumers, then you can see things like how long they wait to charge their cell phone or what kind of places they shop at. What are you thinking about data privacy laws and how they can be used for health insurance or even for other purposes like extending credit to them?
Yep. Thank you very much for the question, and it's a very important issue for us. First, I want to tell you that what we have, the nature of our business generally collects information on specific losses. We have a limited amount of personally identifiable information, and that we do, we take very thoughtful steps in terms of how we protect that information. We're incredibly mindful of the data privacy regulations on a global basis within the US and on a state-by-state basis. And so that is an area that we make certain that we have close oversight and a very robust compliance function. We have a data privacy officer whose job is to make certain that wherever we have personally identifiable information, that we have the controls and the governance to make certain that we are protecting that to the very best of our ability. I would also highlight that we are not engaged in the health insurance business, so a lot of personal medical information are not in the data sets that we collect. It tends to be more commercial, more property, more homeowners elements. So that's something that we are aware of. It is a small exposure for us, but it's something that we take very seriously.
How about number 9?
Yes, thank you for your question, for your answering. The question I have for you is this. We live in the Tampa Bay, Florida area, and we recently had Milton make landfall near us. And the devastation from that hurricane, which was a Cat 3 when it made landfall, is mind-numbing. There's still river flooding 5 weeks after it made landfall. There are cities with debris on the streets still. My question is, does this hurricane modeling that you do, was this one a surprise, or is this something that we should be expecting moving forward?
Thank you for the question. And let me first off start by saying, these are extraordinary human tragedies. The pain that folks have gone through in Florida, particularly Western North Carolina and other areas. Our colleagues in Spain. We never want to understate the tragedy, the human experience, and part of our motivation, part of our mission is making certain that we're doing what we can to improve this. To answer your question specifically, yes, within the parameters of the models, and I want to make it very clear, we naturally can't predict an individual storm, but increasingly the severity and the size and the speed of these hurricanes are within the parameters of the weather events that we've predicted. I spoke earlier about the $150 billion in natural event losses that the industry has to be prepared to deal with. That's increased significantly, largely because our models that are evaluating water temperatures in the Caribbean, wind speeds, the performance and the emergence of larger and slower moving storms, and the increasingly prevalence of water damage from storm surge and the flooding impacts are demonstrating that, that this is possible and likely to be a recurring event. And specific to the issue that you've described, we think it's incredibly important that we also leverage our data and expertise to help local municipalities and local governments make the investments in infrastructure that will enable those communities to better weather and mitigate the damage associated with that. Our infrastructure is really not prepared for the amount of damage, and particularly water damage that we're approaching. We, for a long time, have helped rate fire departments and other mitigation strategies, and we're working to find ways to help communities understand what steps they can take to reduce their the human loss and economic loss associated with it.
All right, I think this will probably be our final question, number 5.
I wanted to ask you about all the growth opportunities that you're finding, especially with AI. I think you said you had 40 different projects you're pursuing. A few years ago, your company sold your financial division to TransUnion, and I think it was over $500 million that you received. I wonder if there's another opportunity that you're considering as a way to capitalize on your growth in an area that might be considered a non-core business going forward.
Thank you very much for the question. And it's important to note that not only did we sell our financial services business, but we also sold an energy business, Wood Mackenzie, that had been part of Verisk before. And I think we recognized that we were not able to create as much value within those businesses, financial services and energy, because we didn't have the competitive advantages and the expertise, the scale and the connectivity that enabled us to gather data and utilize it for the industry. So at one level, I want to be very clear, we love serving the insurance industry. It's a great opportunity for us. It's really what we do well. We are not looking at and don't anticipate looking at other verticals. We will look at where our data and analytics can be applied to support other clients in building other clients, but I think they will be more tangential to what we're doing already. Thank you.
All right, thank you for your questions, and let's thank Lee one more time. Thank you, it was great.
Thank you so much. Thank you for having us.
Thank you very much for coming.